A growing number of economists predict that home prices are going to turn negative in 2023. Now, that's a headline that's very, very different than what a lot is being pushed out there by the media and all news articles looking for people clicking on their articles and to read what's really going on. So let's take a look. This article is by the LA Times, and this is about Southern California's housing market. Now, the key point here is the housing market is going to turn negative, which is different than a lot of the narratives that's out there, as if the market's crashing and we're seeing prices go through the bottom of the floor and it's the end of the world. So starting at the beginning of the article, they're talking about interest rates and how they've affected the market. But it's interesting is the next thing that they say, and this should probably be a lot of the headlines in the news, is that for the fourth consecutive month, housing prices did not appreciate, meaning we've been flat for the last 4 months overall in Southern California. Now, what a lot of people are talking about is that home sales are way down, which is not surprising. Now they're going to comparing last year to right now, meaning the amount of sales that took place last year was the most ever. So it's no surprise that we're down 30%. So in short, what that basically means is that less homes are selling. Now, the next thing which we have to talk about was that rates have gone up, which they absolutely have. Over the last 2 years, we've been totally spoiled by 3% or even below 3% interest rates. And now we're at above where we've been used to even pre-pandemic, but pricing is very much going to be determined what rates do from here. I'm going to say that I'm expecting them to stay about the same, maybe a little bit higher through the rest of the year and into the beginning of next year, which I can understand why people are predicting that prices are going to be lower at the beginning of 23 until rates come back down. The article also mentions that luxury homes have seen a significant fall off where normal median priced homes have not seen nearly as much. And the reality is here in Orange County and Southern California, we have a lot of luxury real estate along the coast, and a lot of our higher priced real estate aren't primary residents. A lot of the people moving right now need to move as opposed to wanting to move. Okay, now this last part gets to really the important thing to say here. While the headline of the article is that prices have stayed flat for the last 4 months, we're still up 17% over where we were last year for the same pricing. So for those people who are thinking the sky is falling and prices are just going down, 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 the reality is we're still up over where we were last year. But I really like this quote because it really is just from the data as to what it is looking like is going to happen. So last couple of points here is that one thing that they mentioned is that few, if any, analysts are predicting that anything like the 2008 Great Recession is going to happen. In 2008, we all know housing prices in Southern California as a whole dropped about 50%. Orange County dropped about 25%, very insulated. And the predictions right now are at worst, somewhere in the 7-8% price reduction next year in 2023, which we haven't really seen at all yet. Again, this is all gonna stem on what happens with rates, what happens moving forward with the economy, which is why we're gonna continue to put out these market updates, what we see boots on the ground here in Orange County and Southern California, so you can make a better decision on your real estate needs. If you have any questions, as always, reach out. Again, I'm Christian. Thanks for watching.